Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is land investment expert John Jasniak. Now, John specializes in the investment of raw tracts of vacant land and has bought and sold more than 6,000 acres throughout 500 plus transactions that he's been involved in. While his company, Jaz Land, is based in Texas, his buyers come from all over the world to acquire his land investments. And so with that, guys, it's an honor to welcome John to the show. John, how you doing today?
Hey, Kevin, doing awesome, man. Thanks so much for having me. I want to talk about massive cash flow in land.
All righty. Well, massive cash flow, you got our attention. So,
Yeah.
no, I'm very familiar with this business model to a certain degree, I guess you could say. I understand the basics of it. I know we're going to dive into maybe some more advanced stuff, talking about larger tracts, subdividing, and selling off individual parcels, i.e., subdivisions. But before we go there, John, before we, I guess go into the nitty gritty, maybe take a few moments. I gave you such a brief introduction. Maybe take a few moments and tell our listeners a little bit more about yourself, your background, and kind of how you found your way into the land space.
Yeah, for sure. So I started buying and selling land in 2016. I graduated from Texas Tech. I was a petroleum engineer, kind of got into the workforce, was working 9 to 5, and realized that lifestyle wasn't for me. I wanted a way to generate more income, preferably passive income. And so, similar to a podcast like this, I was listening to a guy who you probably know, Mark Podolsky, was one of the most OG land guys, came on, started talking about the business. He's like, you can send out direct mail, scoop up pieces of land for 30, 40 cents on the dollar, and turn around and sell them or owner finance them off. And so that's, I bought his course. I bought the Land Academy course and kind of dove right in. Within a month, I was buying my first piece, bought it for $8,500, turned around and flipped it way out in Hudspeth County, Texas, flipped it for like 17, 18,000. And so just started small and it snowballed from there. I was buying 10, 20 acres at a time out in West Texas. And before I knew it, a year and a half later, I was quitting my job. And now, over 6 years later, have been doing this full time and have grown a multi 7-figure business. A lot of subdividing now because, I think kind of natural progression, start flipping smaller projects and then graduate to bigger projects. So yeah, I love the owner finance game. So I hold a lot of notes and it's been good.
Okay. No, I appreciate that background. So let's dissect the business a little bit, maybe from the top and talk about the more common ways that you can make money, investing. You mentioned flipping. So obviously tying up a tract of land for below market value and then flipping at a higher price point to an end buyer. You also briefly mentioned maybe buying it and then turn around and selling it with owner finance terms, so holding the note on it. And then he also mentioned subdividing the land as well. So maybe dissect each one of those very quickly. Maybe not, the flipping's pretty straightforward. There's no need to go any deeper in that. I mean, basically you bought it for under market and you turn around and flip it for a profit. But let's talk about the other, I guess like you said, like kind of what you evolved into. Your business has grown. You don't really do too much of the flipping anymore. You're more looking to buy larger tracts of land, and you've got a lot of notes that you hold personally, as well as you're also subdividing land. So tell us a little more about that business. What's that look like?
Yeah, so for any beginner, I think you start flipping, and with all tracts of land, I guess you could buy you can buy and sell for cash, or you can buy and sell it on owner financing. Kind of there's this misconception that land can't cash flow. Well, we sell a lot of lots on monthly payments or owner finance, and we can always sell those notes later down the line. So I think one thing that you could also toss in there as well is wholesaling. So kind of never even buying the land, more of a signing or wholesaling. You can, of course,
Mm-hmm.
do that in land as well. So flipping, wholesaling, and then subdividing, I would say, are kind of the three main buckets that I would lump into the business. And, a typical subdivide, you can break subdividing down into major or minor subdivides, minor being basically just a survey and no platting or really anything needed, major being full on platting, working with the county or city, and probably doing roads, power lines, etc. For any beginner, man, a minor subdivide is definitely the place to start. I recommend a few flips, sell them for quick cash, build some capital, then start selling them off on owner financing, monthly payments. My sweet spot's like anywhere from $500 to $1,500 per month. As a beginner, you're kind of strapped because you're buying these small lots and, you're going to sell them for 100, 200 a month, but you're going to run into a high default rate. A lot of those buyers, they're paying 100 a month for land in the middle of the desert, and they'll disappear after a few months. So it's kind of this constant spinning your wheels, shuffling paper, which in a way is good because they're just like ATMs, right? You got a $5,000 piece of land you're selling for 100 a month. Someone stops paying you after 10 months. You just collected a free $1,000 and you turn around and resell it. But as you're growing a big business, that can become problematic because you don't want people constantly defaulting. You want good marketable notes and good payers who are paying you so you can go and either sell the note or collect on it and make more money. So, any beginner is going to start small. And then if you get to that 1,500 a month spot on the owner financing game, I think your buyer pool fades out because not that many people are paying 1,500 a month for a piece of land on owner financing. At that point, they can just go get their own financing. They're probably, a savvy enough buyer. So 500 to 1,500 a month is kind of the sweet spot. That, you could build a multi-7-figure business just doing lots like that and selling off 1,000 a month notes.
What type of, in that $1,500 a month, like what's the actual price point of that type of property? Just ballpark.
So I like to keep my notes from anywhere from 2 to 10 years, but usually it's like 5 to 10 year notes. I don't like to create notes longer than 10 years just because they become less marketable, and 10 years is a long time. So, if someone's paying you 1,500 a month for 48 months or 60 months or whatever, you probably, it's a $50,000 to $100,000 property that you're financing off, that you probably bought for, you probably bought and subdivided, honestly, to create that lot, but you probably bought it for 50, 60 cents on the dollar. Sometimes less if you have a good subdivide going on. So, you're in it for probably 20 or 30, and it's anywhere from 50 to $100,000 note, paying 1,000 to 1,500 a month, call it.
Got it. And then just give us a general comparison of like the default rate of that lower end stuff that you really don't touch anymore versus kind of the where you dabble there in the middle. Like, and today it's probably even more, right? As we kind of go into like some economic turmoil, people are starting to look at their monthly finances, like, what do I really need and what don't I need? What can I live without? And if they've got this piece of dirt they haven't done anything with, they had grandeur visions, of they're going to build something there or go get 4-wheelers and go out and camp there or what have you, but it just hasn't come to fruition. They start, okay, well, let's just ignore that one. Let's not pay it. So what's that look like? What's the default rate look like on that lower end stuff versus the higher end?
That's a great question. And funny enough, I was just looking at my portfolio here yesterday, so I'm very fresh on this. So as you mentioned, I don't really touch that stuff anymore. I got 120 people paying me right now monthly, and only 3 are in default. So we're talking like 2 to 3%, and they'll probably catch back up. Now in the smaller stuff, what you're talking about, the default rate is much higher. You're looking at probably at least 20% of the time those folks are not going to carry their note to term. So my recommendation is, and it depends on what state you're working in, but a lot of these people teach you to set it up with a contract for deed. And that's actually a really good document because it allows you to take back the land pretty easily. I'm not an attorney. Go seek your own advice, but a contract for deed is great because someone stops paying you, send them a couple notice, you take the land back and you resell it. Right. So the 20% plus default rate, I actually used to like it as a beginner because people pay me for 5-10 months and then I would go resell it and make more money. A lot of times we even resell them for more, but as you're growing a big business and trying to scale, you can imagine 100, 200, 500 people paying you and they're defaulting 20, 30% of the time. It's like, man, as a loan originator, we just want our money, or we want to sell it to an investor like you or whoever who wants a performing note, but they're not going to buy a note that is defaulting 20, 30% of the time.
What does that secondary market look like for offloading those notes? I mean, is there a pretty robust one available?
There is, and right now it's stronger than ever, I would say. I think as probably the interest rates and all the stuff's going on with the economy, a lot of people have turned to private money, their own private investments, and seeking a yield or return with hard assets. And a great way to do that is with notes, whether it be on land or homes or multifamily or even RVs, sheds, whatever it is. Man, funny enough, another investor sent me a spreadsheet today. It was another guy in the space. I don't want to mention any names, but they were looking to offload like 300 notes or something, and they had like 200 or 300 in their spreadsheet sold. It was like this whole breakdown of like 500-600 notes, and like half of them were sold, and it was like a whole portfolio of 500 or 600 notes. And so the game is strong out there for the secondary market on the notes.
What type of I mean, if you were just to take one of your notes, pull in the market, like how the end buyer, like how long do they want to, how much seasoning does it need to have before it becomes an attractive note for an end buyer? And then is there
Yeah.
any type of discount off of face value that someone's expecting to get on the back end?
Oh, for sure. Always a discount. As far as how that is calculated, a lot of people get hung up on like the discount on principal
Hmm.
balance, but really what you need to look at is what yield or IRR that investor is looking to achieve on that. And so pretty typical in the land space from what I'm seeing is like the investors want a 15 to 20% annualized rate of return. So then you discount your face value based on what they're looking for and back into how much they pay for it today. It usually works out to be anywhere from 50% to 80% of the note value. So, you can envision, that's why I don't make my notes any longer in 10 years, because as you get way out there, 10, 15, 20-year notes, the investor is going to be discounting it more to buy that
Yeah.
from you today. So a 10-year note, probably looking at 55 cents on the dollar. A
Hmm.
3 to 4 year note, you're probably talking, 80, 85 cents on the dollar. And then it depends on the investor as well. And it also depends on the investor for what they're looking for. Down payment. Did you do a credit check on the buyer? How seasoned is it? You can find plenty of note buyers out there who will buy it straight out the chute with no seasoning and, relatively low down payment, under 5%. And then you're gonna have other note buyers who are more picky and want you to have credit check and 10% down and blah blah blah. Personally, I don't do credit checks, and I do really low down payments, less than 5%, because I always know if they default, I can go resell the land. So I've still been able to find plenty of note buyers on a note like that.
Hmm. Got it. And let's talk about the land itself. Just again for those that are listening that aren't familiar with this business model, and we're not talking about land, in the heart of like Dallas, Texas. We're talking about
Yeah.
land that's out in the tertiary barrier, out more rural areas. And so maybe kind of give us an understanding of where these tracts of land are located. What makes it desirable for the end
Mhm.
buyer. Like what are they typically looking to use it for, and then I'd also like to get into, I don't want to forget, so I'm just going to throw it out there. Just get a better understanding of the buy side. Why are these owners typically looking to sell and willing to sell at such a discount?
Yeah. Well, let's start with kind of a high level of like, okay, what sort of land are we targeting? Again, there's a lot of different facets or aspects to this business. Infill lots and commercial lots is a whole nother ball game. For sure, you can
Hmm.
make a ton of money doing that inside city limits, in neighborhoods, residential neighborhoods, etc. My favorite asset class or type of land is outside of city limits, but usually 30 to 45 minutes from a metropolis or major city, whether it be DFW or Abilene, or some of the guys who are doing it in North Carolina or Virginia or Tennessee, like 30 to 60 minutes from Nashville, for instance. But
Hmm.
you're outside the city limits, no restrictions, so that way it just opens up a million possibilities for what the buyers will do with it. A lot of mobile homes, tiny homes, barn dominiums, some folks going out there in RVs, some folks site built homes, livestock. So there's a huge market for people who are kind of living in the city, obviously paying a ton in rent or in a mortgage payment, but they can move outside the city and pay 1,000, 1,500 a month for a piece of land, put a mobile home on it, have kind of the 10 acres of their dreams with horses and, a water well or a water hookup, all that stuff. And so it becomes really, enticing for them. And that's a huge market, folks trying to move outside the city like that. So that's my favorite. Plus, when you go to subdivide that land, you're dealing with very little that's actually required. You're not dealing with having to put in sewers and water lines and all that stuff. A lot of these counties make it relatively simple. Some of them you can even get plat exempt if you stay above 10-acre lots. So it kind of opens up the ball game. You don't have to go in there and spend $1 million in engineering and feasibility and all that stuff.
Very interesting. Okay. And then as far as finding your buyers, I mean, are there a few dedicated websites that you guys list your properties on?
Yeah, so for those who know me, they know I'm not a big fan of realtors and using realtors or giving any exclusivity in the land side. We actually try to stay away from realtors, and we do probably 90% of our selling on Facebook with Facebook ads. It will
Hmm.
geo-target wherever the land is we're trying to sell. So if it's near Fort Worth, we'll geo-target Fort Worth for a 10-acre tract outside the city and run Facebook ads. Lands of America is pretty decent as well. We post on the land.com network, Land Watch, Lands of America. And then if you're going to go the MLS route, there's just some markets that perform really well in MLS. I don't know why,
Mm.
whether it's the amount of realtors in the area or whatever. I like a pay per list MLS service. So that way you can just pay, get your listing up on the MLS, and you can actually field the calls from the buyers themselves and not have to worry about a realtor who won't pick up the phone or won't follow up or whatever. So those are kind of the three methods right there.
In that scenario, you just have to pay the the I guess half the 6% typically if that's 6%, you just pay the 3% if the realtor brings you a buyer. Is that how it works?
Exactly.
Or okay,
Yes, and a flat rate to whatever service you're using. We
yeah,
use Congress Realty. I'm not affiliated with them, but they have a pretty good pay per list MLS service.
okay, okay, good deal. What haven't I asked yet that's important that you think the listeners should know about the business?
Man, I think kind of how we source our deals. How do you find a good piece of land to buy?
Mm-hmm.
As a beginner, or someone just entering the space, if you're starting small, it's going to be largely through direct mail. SMS texting is growing pretty big nowadays. So texting straight to landowners. We use Data Tree to pull data, and then we'll send out direct mail or SMS text to landowners saying, hey, we're interested in buying your land. We do direct offers, so we're not going to give them. I don't do range offers, or I don't do just neutral letters. So if you send out 1,000 letters and you don't offer them a price, you're going to get everyone and their mother
Yeah.
calling you that they want to sell their land for $1 million. So I would not recommend that. We send out offer letters for depends on the size of the land. Smaller pieces, deep West Texas or middle of nowhere Arizona or Nevada, for sure you can still buy land for 30 to 40 cents on the dollar. You can pay someone $3,000 and their land's worth 10,000. You're going to buy it, you're going to flip it pretty quickly, and you're going to make a good chunk of money. As you kind of step up into the higher price range, usually 50, 100K plus. So we're dipping into ranches, probably a project we're going to subdivide, something like that. You're not going to be able to get away with offering 30, 40 cents on the dollar. You're going to have to be up like 70 to 80 cents on the dollar. And then you create that value through subdividing. And I've been finding a lot of my stuff on the MLS nowadays, just MLS listed projects.
Mm-hmm.
A lot of estates out there and sellers who are just trying to offload their land, and you get to that higher price point, it becomes kind of illiquid. So funny enough, I got one going right now. They told me they're going to accept it, but I've yet to see the signed contract come through. They were asking $350,000 for some acreage in Texas, and I offered them $115,000, and the broker was like, that's a little too low. Like, what's your best price? I'm like, man, I can do 126.5. And I sent that in, and it's owned by a private university in Missouri.
Mm.
Somehow owns a piece of land in Texas, and apparently, I don't want to jinx the deal, knock on wood, but they're heavily considering / going to accept the deal. So that you can do a lot of that too, just lowball MLS
Yeah.
listings out there.
How are you coming up with your comps? I guess back to like the direct mail when you actually submit it, you're literally sending an offer in the mail. I mean, what are you guys doing to come up with comps? It's definitely not as easy, I'm assuming, as what it might be for
Yeah.
finding comps for stick built homes that sold in DFW, right? So
Yeah.
how's that work
Yeah.
out?
It's a great question, and it depends on the state. Texas is a non-disclosure state, obviously.
Mm.
So what you can do in Texas is what is listed and kind of what is on the market, and base it off of that. If you really want to get next level, what we do on these projects when we're entering a new area, we'll actually do what I call a Facebook demand test. So we'll kind of post on Facebook, 10 acres near Fort Worth in this location coming soon with a price. And then I'll wait and see kind of
Mm.
what my cost per lead is. And then I'll back into what I know I can pay for the land that way. So that's a great way. A non-disclosure state such as Texas, you can actually go into a source like Texas File, or other states have their online databases where it's like the county courthouse or the county clerk, and you can start pulling deed of trust or mortgage notes. And you can actually see, you can back into what is actually sold. Someone sold something on owner financing, like I like to do, and what is sold in the area, and you can get direct comps that way if it's a non-disclosure state. Other states like Michigan. What are some other ones? Nevada. You can actually go into the county database a lot of times, and actually in Colorado, it's kind of crazy. You can click on a lot on GIS map, and they
Hmm.
collect their data from like, oh, the land sold in 2020 for $15,000, and today it's worth 30 or 40, and it's like, okay, they bought it in 2020 for 15,000. They have that data in the county. I'm gonna go in and offer them 25, and it's worth 40. So some states make it stupid easy, man.
Really easy. Yeah. But how do you do it on scale though? Again, just given, what you kind of laid out there, at least in Texas, it's kind of like piecemeal together. Like, how do you do that on a big scale? If you're going to drop 500 direct mail pieces or 1,000 direct mail pieces, you surely aren't going one by one by one for that entire 1,000 and coming up with what you feel is a fair comp or an offer, right? Or how does that work?
It's funny that you say that, because we have done a lot of that actually. And the big subdivide projects, we'll pick a county, we'll go into the GIS map, and we'll manually scrape 300 to 500
Hmm.
parcels and assign each one a direct value based on what we saw that's listed, and a demand test, and some public documents that we pulled from the courthouse. So we do
Okay.
that, and we have actually has a ton
So
of
probably find
success.
a better response rate then, because you guys are really getting
Oh
granular.
yeah.
You're pissing off less people when they
Yes,
receive the
and
letter.
if you don't want to do it that way and you want to do it more at scale, which is definitely be more practical for smaller pieces or bigger mailers, you're largely going to be basing it off of what is listed and what is selling out there. Now, what is listed is not always what has sold, but you're working with kind of the best you can. There's sources out there like Priced and other data providers. You got to be careful with what they tell you land is trading for in the area, but they give you a good tool to put in your tool belt. So what's listed, and then what I recommend is probably still pulling some public documents or doing some Facebook testing. If you're going to rip like a 5 or 10,000 count mailer, like some of these folks do, like you
Hmm.
want to get, maybe spend 50 to $100 and pull some documents or get some test data.
Yeah, no, it's a great idea. How about funding? I mean, these larger tracks, 50 to 100K, you're doing multiple. Like, what are you doing for funding? Have you found that sellers a lot of times will carry financing for you, and you can kind of play the arbitrage game, or what are the
Yeah.
options
So you,
there?
you sound a little familiar with this business using wraps and stuff like that. So that's my favorite
No,
thing to
I
do.
just know that there's not a lot of funding options. So I would assume that like sellers, they've got large tracts of land. I mean, there's not 10
Mhm.
people lining up, that's got bank, number one with cash to buy it. Number two,
Yes.
banks aren't really all that interested in funding, raw tracts of land that have no income associated with them. So yeah. So I just assume there's got to be some type of creativity there that happens. So what did
Yeah.
it typically look like?
Yeah, so you hit the nail right on the head. There's a huge arbitrage with some of these larger parcels not moving because banks won't lend, people don't have
Hmm.
cash, etc. So in comes me. I love to do seller financing, so I'll offer them 10 to 20% down, ask them to carry the note, and I have a special deed of trust that I like to use that basically removes the due on sale clause and allows me to sell all or part of their land while I'm paying them. They'll maintain first lien, and we'll work in a clause that allows them to get partial releases. So if I sell off 10 of their 100 acres, I'll write them a check for 10% of the remaining principal balance. That's if I sold it for cash. But if I like to do a lot of wraparound notes, so I'll sell them off to my buyers on financing, and I'll still pay my seller on financing. And so the seller actually will never know what my buyers are paying me. They'll just be getting their monthly check in the mail.
Right.
Now, a lot of these sellers, especially if it's in a state or something like that, or there's multiple parties involved, they don't want to seller finance you. In
Mhm.
that case, I would say it's a numbers game, move on to a different project. Or if the project is really good, what I've started to do is bring in private money. Of course, you could set up a fund, you could set up a GPLP, all that stuff. But what I like to do is work with just basically one investor. Like, hey, I'm looking for 500 grand. You come fund it. We'll do 16 to 18% is kind of what I've been doing, fully collateralized by the land. And they'll basically step into the seller's shoes and finance it back to me basically and allow me to do my thing, since the seller doesn't want to do it.
Mhm. Okay. No, very interesting. There was another question I had. It just slipped my mind. Servicing the loans. You'd
Mhm.
mentioned you've got a few hundred of them. I'm assuming that becomes pretty cumbersome. Doing it yourself or internally. Do you use an outsourced loan servicing company to help you out?
I don't actually. We still do it all
Okay.
internally. That's actually, it's funny you mention it. It's a lot of my time recently has been setting up both systems and accounting and kind of managing and setting up the systems for that. We use the mortgage office, which I love. That's like one of the big boys, if not the big boy in the space, that a lot of loan originators use. They're great reporting, great functionality, good cloud-based software now. So the mortgage office, kind of all my payers are in there. We use an ACH processor that ticks recurring payments. People paying me just pulls them automatically from their bank account. We have our own database spreadsheet on the back end that keeps track of it all. And it hasn't gotten too crazy yet. I foresee when I get to 500 plus loans or something, like it's going to be a full-time job for someone. But I think I'm a huge fan of keeping that in-house, because I know people who've outsourced them to Madison or some of these other loan management companies, and just we act very quick. When someone misses a payment, boom, a notice goes out, and like, we're taking the land back, no matter what their excuse is or whatever. Like, I'm not that hardcore. Like, I give them some leeway, like, okay, I'm going to pay you, wait on me, whatever. And I'm like, okay, Mr. Buyer, yes, you got a couple of chances here, but you string me along too much, like, we're pulling the trigger and foreclosing you. So I like the flexibility of moving really quickly, taking the land back and reselling it really quickly. And it's harder to do that with a note management company.
Yeah, I was going to ask, like, what, and when a default happens with like a loan servicing company, like, how far do they take it? Like, they'll send a notice out in your behalf, but then ultimately, when would you have to step back in and take over the process?
Well, you might know more than me on that, man, because like I
I
said, I've
don't.
never
Yeah, I
used a
don't
note
know.
management. Yeah, I've never used one. I've only heard
Okay.
horror stories from some colleagues
Yeah.
of mine. So
No.
taking
And
months.
then Texas, you guys utilize a contract for deed. Once you are ready to pull the trigger, what is the process? Like, how long does it actually take for you to get the possession back of the property?
Okay, so for all the Texas specific people watching, this is a golden nugget for you. You got to be very careful with contract for deeds in Texas. We only use them on really, really small lots, usually 10K or less. Everything else is a deed of trust, warranty deed with vendor's lien secured by a promissory note, and we record those documents at the county clerks. The reason is because if you Google contract for deed requirements in Texas, there's actually a lot of requirements, and you can get in a jam if you use contract for deeds on your lots, especially if buyers claim it as a primary residence. So you
Mm,
get a lot of beginners out there think they're going to use contract for deeds, and they're really opening themselves up to a gray area. And there's not great law supporting contract for deed use in Texas, and
okay.
you could actually get up to triple damages against you if you get yourself in a jam. But we do it
Got it.
on the smaller lots because you don't have to foreclose people, and you can take it back, cancel the contracts real quick. And like, worst case, my thought process is always like, if a buyer really wants to sue me and get me in a jam, like, I'll just deed them the property and call it good. But on larger properties, we do deed of trust, warranty deed of vendor's lien. So if someone misses a payment, we have to send them the appropriate notices. It's 2 notices. And then eventually someone has to get to the courthouse and read off a script. It's either me or my ops manager or somebody. Sometimes I still like to do it. I just did one, a week ago. So.
Okay. Okay. Good deal. Well, awesome, man. I don't have any other questions, but I mean, is there anything else that we haven't covered? I mean, as far as, again, just the high level points of the business model and how you make money in it. I mean, I guess the subdivision. We didn't go too deep into subdividing this land. Let's maybe talk about the
Okay.
kind of the different stages. I mean, you find a tract, you're going to subdivide it into 10 individual parcels, and then what? Who are you typically selling those individual subdivided parcels to? Same type of buyer. I mean, someone that might put an RV there, might put a house there. I mean, kind of like the same end target demographic, or is it different?
Yeah. So with the subdivides, you're usually dealing with a more um, particular buyer, in the sense that these are not desert squares usually, or desert chunks. When you're subdividing, they're usually closer to the city. So you're dealing with a more sophisticated, serious buyer who's actually going to use their land, put an RV
Mm-hmm.
on it, put a mobile home on it, etc. From a high level perspective on the subdividing, really you have two types of subdivides: a minor and a major. Minor being, like I said, just running a surveyor out there. So it, like the one I just did near Abilene, Texas, it was so simple, man. We we got the land under contract. I knew it was a good deal based on the price and what 10 acres were selling for out there. And this was 140 acres. I was a little concerned about water, so I ran a well driller out there. We did 2 test holes that cost me $3,200 total. Got good water shows, so I was comfortable with it. We closed the deal. Immediately upon closing, the land was surveyed like a week before closing, and I said, this is how I want to break it out. Each lot has county road frontage. There's 10 lots. Boom, land closes. Next day, I posted an ad up on Facebook, and I knew I underpriced the land. I did 1,500 down and $750 a month for 60 months for 10-acre tracts out there. My cost per lead was running at like $3 or $4 per message, and I had half of them sold, half the lots sold, so 5 lots sold in 3 days. And so it was
Wow.
nuts. It was basically closed. Boom. 3 days later, I have it sold. I was like, okay, now I'm going to start raising my prices a little bit. Yesterday, I just sold another one. We have 2 lots left out there, and I raised my price from $750 to $1,000 per month. So that's a minor subdivide. It happens real quick. Like boom, close, surveys ready, start selling immediately.
Yeah.
Major
And so
subdivide.
yeah,
Go
and
ahead.
just real quick, it would be so to be up to the end buyer to actually put a well and a septic on their individual parcel, correct? If they want to utilize it in that manner.
It's a good point. Yes, it would be up to them, and I always leave it up to them. And there's a reason for that, because that's a perfect example. Let's say this lot's $50,000 to drill and complete and have a well ready out there is another $8,500. So boom, now I'm
Yep.
58.5 into it. A septic's probably another 5 to 10 G. So call it 65 total. I can sell a piece of raw dirt out there for 50,000 all day long, but boom, 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 I start adding septic, well, all this stuff. Now I'm in
Sure.
for 65. Now I need to sell it not just for 65, but have an incremental increase on top of that, because I just outlaid all this capital to put the infrastructure in for you. I probably need a little bit of return on my money on that utility I put in, because I don't
Yeah.
do it for free. And so now you have to upcharge even more. And what I typically find is that the buyers do not perceive that added value as significantly as you would think. So
Yeah.
I pin it all onto them.
I can imagine. I mean, if you're talking about like maybe a 10-acre tract of land, like you don't know. I mean, there might be 3 different locations on that property that that would be ideal for for the well and for the
Exactly.
drain field, or so like depending what they're going to put there, like you put the well over here and then they're like, no, they want it on way over on that side. That's where they intend to
Yep.
put their house or their RV, and now what do you have? Kind of a
Some
useless
buyers won't
system in
even
place.
want or need them, man. Maybe they just want to go out there and use it for hunting or
Yeah,
whatever. And so they don't even need a well.
right,
So yeah.
right. Well, good deal, bud. Well, John, this has been a fun conversation, man. Sounds like you got a great business going there, and appreciate your time today, and appreciate you sharing all the insights about the business. And yeah, wish you all the best, man. But anything else that you'd like to say to the listeners? Any final thoughts before we wrap it up?
Yeah, man, just land is a great business. I love it because it's simple, it's easy. The one downside to it is it does not have good tax advantages. So kind of my thing is always,
Yeah.
I like land. I advise people to get into real estate. A good place to start is land, because you can make a bunch of money. Then when you start making a bunch of money, look into investing in other sorts of real estate, whether it's commercial, multifamily, storage, etc., for those tax benefits. And I would just say, if anyone wants to connect, please send me any land deal. I love looking at deals. I'll do it for free and give you free feedback analysis. Just at John Jasniak on any social media, you'll find me. Hit me up. Would love to look at a deal with you and give you some feedback and connect.
All righty. I appreciate you coming to the show, my friend.
Thanks so much for having me, Kevin.
All righty, guys. That's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.